My friends are at Anthropic. They're like, yeah, listen, we go in and the CEO of a Fortune 5 company hugs us and says, thank you for visiting us.
How do any of us compete for go-to-market talent when reps at AI model companies are getting prestige and an 8-figure equity package? Today, we're joined by Craig Rosenberg, Chief Platform Officer at Scale Venture Partners, to help us explore this topic.
There is so much value in the them all, hire them, and come over here and go build a big company. There's still tons of those folks.
But we don't only talk about how to navigate a wild compensation market. As rising CAC continues to squeeze us all, Craig shares some of the scrappiest, most effective approaches for GTM that he sees working right now.
The value of building a when you look at the data, it's amazing.
Craig is a legend who helps software companies drive efficient hypergrowth every day. So if you're a go-to-market operator looking to stay ahead of the pack, this episode is for you. Welcome to Topline.
Welcome, listeners, to another episode of Topline. Yes, it's me, your co-host, AJ Bruno, joined by Asad Zaman, CEO of Sales Talent Agency. And we are without our fearless leader, Asad, today. Sam got married this past weekend. So we're celebrating Sam today in this episode. Just kidding.
The few excuses that are valid to miss a Topline recording, I think this qualifies.
I'll give it to him.
We both have been on our deathbed and still done filming of Topline. So that third voice you hear is Craig Rosenberg. Craig is joining us today as our guest. He joined Scale in 2022. It helped build and manage their GTM platform. The Scale GTM platform delivers critical expertise to help software companies drive efficient hypergrowth. Prior to joining Scale, Craig was Distinguished Vice President in the sales practice for Gartner. While there, he advised revenue leaders on their strategic decisions and wrote innovative research on new GTM strategies, such as revenue operations and account-based strategy. He joined Gartner in 2019 as part of the acquisition of Topo, where Craig was the co-founder and chief analyst. Craig was a magna cum laude graduate of UCLA, where when he isn't talking about GTM strategy, he is spending time with his wife and 3 young boys. We just had a whole conversation. Yes, Craig has twins. I also have twins. So, Craig, welcome to the show.
Okay, wait.
We're not going to jump back into that.
No chit chat. Yeah.
No chit chat. Asad, what do we got in store for today?
I want to ask questions about this. Well, you're fine. We don't jump in. We don't talk about the things we're here to talk about. I want to talk about Anthropic, OpenAI, and sales hiring. So the question I have is, can anyone build a good sales team with the amount of hiring these companies are doing and the sort of packages they're throwing out into the market, which is making it very difficult for people to be able to compete? So, as we all know, both of these companies are growing at astronomical rates. They've achieved quite a lot of scale and size right now. We hear a lot about their technical hiring in the newspapers because there's these dramatic $100 million type of offers over there. But obviously, whenever you're scaling product, you're also scaling go-to-market. And go-to-market, these guys are hiring a ton, especially when it comes to mid-market and enterprise. And the sort of offers that they're making is doing 2 things. It's driving up compensation in the market, and it's making it very difficult for companies to compete and stay sustainable at the same time. You can only pick one or the other. Just some data anecdotally, I know individual contributors who made 10 million in a year, not through commissions, but through the equity grants. The equity grant starts at 2 to 3 times what a normal startup would give to an individual contributor. And then based on how these companies are growing in valuation, dramatically increases in a 12-month, 24-month period. And so these are reps making CRO type of money. And how does this play out, Craig? Are you hearing about this? Are you worried about this? What do you think about this?
Well, first of all, I will be applying for jobs at OpenAI and Anthropic after this. Yeah. I mean, their hiring process, they're getting the best folks out there and they're making them a lot of money. But it hasn't really, I mean, I haven't seen that sort of trickle down necessarily to the companies that I've worked with or engaged with. But let's just say that it was. I mean, look, I'm a free market guy, and I've seen this party, not these numbers, but we've seen this party before where 800-pound gorillas that hire everything, all the best people on the market. And there's still, let's call it thousands of, because that's where the number is of companies that survive. I think the game's the game and you got to figure it out. It's the same thing. I mean, AJ's in Philadelphia. I mean, they spent their money on the Phillies, man. Like, but they did not spend the same number. Everyone said, well, how can anybody beat the A? Well, I'd say, can anybody beat the Dodgers, right? With the amount of money they spend, but someone will, and you have to adjust and figure things out. Like, we've seen this stuff in the past. We've seen startups that have managed to come up and get big with their own sort of development strategy. And I don't want to use the word enablement, but we have to, and you have unique opportunities now with AI to do really great things to train people up and to build them as your own, and that's just one example. I mean, I feel like, look, if Shohei Ohtani is getting signed no matter what to Anthropic or OpenAI, then they are. And you got to either build your own farm system, you have to change your hiring profile to a unique profile that's unique to your business, but then you got to coach them up. I mean, that is the reality of the game. By the way, that's just the reality of the game no matter what right now, because selling in this environment, if you're not that, I mean, look, my
Different.
friends are at Anthropic. They're like, yeah, listen, we go in and the CEO of a Fortune 5 company hugs us and says, thank you for visiting us. I mean, I mean, Jesus, you better make $10 million. The rest of us would never meet them. We wouldn't even get to the CIO. We may not get to the senior VP. We have to grind and work our way up and put together those deals. And so, like, I don't know. I mean, I haven't seen I think that would have an effect. You probably, since you work with so many companies on their hiring, see that, and like
It's
that's
moved
an
the
unfair
market.
competition.
It's
Go
moved the
ahead.
market a bit. Like, so enterprise AEs are now almost always getting a 400K OTE 50-50 split.
Yeah.
And till not too long ago, 175 was the top end on a 50-50 split. So to see a 4 in front of enterprise AE comp is interesting. It used to be strategic AEs would be at the 400 mark with a 2 in front of their base salary. But that just in the last 6 to 9 months has shifted completely. So that's really interesting. If you think about who are these companies trying to hire, they're trying to hire from the organizations that had really strong sales lineages, so like a Mongo and these sort of places.
Yes.
And so I think over there, the competition is much harder. When you look at people that might not have been selling into the technical teams, it might not have been an API type of sale, might not have been such a technical sale itself. I think over there, the competition is less and it's affecting the market a bit less as well. So there's some sort of a bifurcation. AJ,
Yeah.
you're a founder. If you had this choice of you either have to meet the market to hire the person who can ramp up quickly, or you have to stomach a longer path to productivity and invest more in enablement, but have a better shot at making the hires that are good and holding on to them. Where does your instinct flow in that situation?
Asad, I am a founder. Thanks for addressing me as such to start with. Also, Craig, can I just address the dig it that you took at the Phillies that was just in there? The-
Hey,
it's
I was just trying to relate to you, AJ. That's
I
my sales training come into play. But
the,
yes, as you were, please. Yeah.
yeah. Well, the reality is actually this is the one positive. I have Villanova season tickets, so the last few years I've been like a huge Knicks fan. So I will just hinge everything, all of my sports mojo are on the Knicks, as well as all of New York's mojo. So the the interesting thing though, with what you asked also, just going back to your question, when you're a founder, you don't have product market fit, and let's say you raise a 20 million Series B or $40 million Series B, and you're still relatively early. I could be a Series A. It doesn't really matter. Your goal is to really grow. You tend to go out and overpay for that like CRO, someone that you think is just going to knock it out of the park. I know we did that. And so the question that you're really asking is that, and this is different from Craig's, which is these companies that have a huge opportunity. They're a talent pool that they can pull from and they can pull anyone in where we can't. And or startups can't, I should say. And so when
Yeah.
you find someone that you think is just going to be a knock it out of the park hire, you're gonna do what you can. You're gonna overpay. You're gonna do an OTE of 500K. You're gonna give a 3% ISO to that person, And you will almost always make that mistake. And Craig, I would ask you, how many times have you seen companies make this exact mistake on the GTM, which is they think they really need this. The founder really thinks this. They're hinging it on it, and then it doesn't work out. What I would say to that, though, Asad, is like we're going through this a little bit ourselves. We have a product, and we're rolling out a new product, and we're deciding whether that we need a GM for that, or do we need someone to just come in, or is this current team suited to be able to sell this new product? So we're having this debate and this discussion, and what we ultimately came to is like, well, we need to come up with a clear enablement and truly understand our end buyer as much as we possibly can before we make this decision. And I think that's where we're tracking towards. So on your question of like, what do you do here? Just really truly know what it is you're selling and the enablement that goes behind it.
The person that is going to do well at Anthropic may not do well at Series B.
They're
By the way,
probably not going to do well at
yeah,
Series B.
yeah, thank you. That's even stronger. I like that. I knew I liked you. Philly, though. Those guys, they tell it the way it is.
Don't you think the pushback on that is that for $10 million a year, people will eat all sorts of flavors of shit? Like, if you can make that sort of money, yeah, you like the wildness of Series B, but you deal with like the process and the systems of Anthropic, and you'll be like, yeah, because the upside's just so great now. Like before, the upside was like marginally better. Like quota attainment was 10% higher, OTE was give and take the same. Now it's like big difference.
I have a couple startups. They're young founders, so they probably idolize these guys, but they will only hire sales leaders, sales reps whose last two companies failed because they want the hunger and the grit. Anthropic's not going to do that. They're hiring the person that literally was bringing in 150 million a year at SAP, and by the way, in terms of what they brought in, not their what they brought in, written in. 10 million is going to come like with like years of their life. That's not the folks that are getting hired into the big
So I
the
think
OpenAIs
this
and
is a good point.
Anthropics.
That if you're like a super early stage company, there's people out there that these companies are going to ignore. And I do think that actually I worry less for the Series A companies. I think they don't need that many people. And there are, as you said, opportunities to make certain interesting hires. And also the sort of pirates that do well in those companies, they will probably be more attracted to a mission than to just like financial upside, right? But then you've got this thing that happens now that I'm curious to get your thoughts on what you're saying, which is once a company has product market fit in AI, the way that they scale over the next 2-3 years is at rates that is just crazy. We've never seen this before. And the downstream of it is things like they expand geographically a lot differently than companies from previous eras. They're opening international offices very early, pre 100 million in ARR, and they're not opening them. Chad Peets was on 20 VC talking about this, and Chad is the GOAT in terms of what I do. He was talking about how before it used to be this sequential, you open Europe, then you open Asia, etc. Now it's like open everything at the same time. So when you hit that sort of moment where now you need to scale at these crazy rates, this becomes a real big blocker for some companies. It's expensive to scale anyway, but now how do you like it's become so much more expensive? Becomes a real issue.
I know that there's the other end of the market, which is like the SaaS company that got to 300 million, and who are they going to hire? I think that's a different question. I did see it on the list, and I was hoping you weren't going to bring that one up because I have no idea.
Oh, let's talk about that.
Yeah. But look, guys, I still think we're making a bit. I think there's inflation. But I don't know that you have to go to the Like, look, if a person's going to go to Anthropic and be a third level leader, let's say it's the CRO that you want to scale. You want the one who got slighted. Do you guys curse on the show?
Yeah, you go for it.
You can go
Yeah,
for it. We went through a period where we didn't, and we had kids.
The numbers
that were
came
I don't
back.
give a shit. These
Those
guys
kids-
do. You have my permission.
Those kids are like 13 years old now. So
We
who
had
the
somebody
fuck
who's like,
cares?
I listen to this podcast in the car with my kids. I'm like, why do you listen to this podcast in the car with your kids? Like, listen on the podcast. Listen to my right.
But look, there is so much value in the fuck 'em all hire.
Yeah.
And they're the ones, you still have that same thing that I'm talking about, which is like they just failed. So like they got to make it. Then there's a person who was third in line at Anthropic and did not get the job and is not willing to be an IC, even though there's an upside. Look, if someone's just in for the money, then they're in for the money. I'll tell them where to go there. But like if you're in to like prove yourself and to like die with this big win as part of the things you hang on your Hall of Fame wall, well, bro, you're third, so fuck them and come over here and go build a big company. There's still tons of those folks. I don't now it
I
will
agree.
cost you more. Now you're talking about something else though, because you're saying, well, when you want to scale now, it's going to cost you a lot more. The most important thing is, quota to comp and your ability to hit that. I mean, if the number's 400, then we're gonna pay them when they hit a bigger
1.2,
number.
1.6. Yeah.
Yeah, and like I just saw, you guys can tell me because you guys have now more access to data, but like I was looking on Chris Orlov's LinkedIn, he was saying it's like the quota attainment's at like 30% or lower. So like,
I think the quota attainment numbers that he talks about, obviously for the sake of what he's selling, it made sense to use that number. I'm not sure it's the most interesting data point because the market's so big that it's going to get pulled down by all these like non-product market fit companies where you don't have a shot at quota attainment. Even if you're good, you're just selling a bad product into a very competitive, noisy market. I think if you do a rep view and run like a custom analysis and say, let's create a basket of B plus A minus companies. And what is quota attainment there? And it ends up being like a reasonable-ish number. It's close to what you would expect. Like, in that sort of like good, decent company cohort, there's a decent amount of people that are able to hit their quotas. I think AJ would have much better data on this, but I would imagine this in that cohort, 60 to 75% of people hitting their number.
So for our 1,500 customers, it's 48% right now. I just like
But you're
looked.
like, you tilt SMB mid-market.
Yes.
I was throwing this out as like another factor as we do these calculations. But for me, and well, I'll let AJ go, but like if it costs more at plan, you work it out in the quota to comp ratio and you pay for what your wedge costs. Like now, if you feel like you have to pay $10 million, then you have a huge problem and you got to go back to the drawing board because it's not gonna work. There's still really talented people. I'd rather sign Jalen Brunson than LeBron James. How's that,
There
AJ?
we go. I'll take that
Thank you.
one.
And now look at Jalen Brunson. He is a legend,
Yeah.
right? He did get paid a lot, but he was not LeBron. You didn't have to burn down the whole village to get him.
55 million over 4 years. What a steal
Yeah.
from the Mavericks. But and
See,
then
there you go.
I mean, they let go of Luka. But look, I think you're hitting on the thing that Greg, that I think I tend to think about, which is all I think about, which is how do you incentivize the team to do the things that you want to do? And if you have so much unknown in the business, it doesn't matter what size. I mean, I think even Anthropic and although they don't pay commissions, want to come back to this point because we had this conversation last episode. I was asked, do I think that OpenAI and Anthropic will pay sales teams commissions within the next 5 years, just regular commissions? And I said no. I took under on that.
They have to.
I would take the under on that.
Where were you last week, Craig? I was being ganged up by Sam and Asad.
The whole point comes down to, can they sustain this growth rate? Because if your equity is not increasing, I think at like 5x a year, then I just don't think that you can make up for the cash comp on equity that is also illiquid compared to commission payment. So I don't think that, I don't see a world in which they keep growing at that rate. Like, that's wild.
You hinge it on growth rate, and I hinge it on the value of equity as a replacement to
Yeah, but
commissions.
otherwise their stock-based compensation will just go out of whack, right? You have to maintain a certain percent in stock-based compensation. And so you give a person $1 million and it becomes $6 million in a year, that person's like, I don't need commissions. But if you give a person $1 million and it becomes like 1.3 in the year or 1.5, and it's not that liquid, it's
But they're
not that
not but they're not public companies, so you don't have to follow a certain guideline around that. You
I know,
can
but eventually these companies will be public in 5 years. If you think these companies are not going to be public in 5 years, that's crazy. Like
okay.
you at this scale and size, they want to continue raising fund private money. Who's giving them this money?
Uh,
The
back
Sultan
back
of Brunei hasn't gotten into venture funding yet. Like there's a limit to how much private capital you can
back
raise.
to the question though around the comp piece of it and the upside and making sure that the upside is aligned with what that seller like I have a perfect example. I have someone that I've worked with for 10 years over 2 companies, and there's an opportunity to hire him, to be a strategic seller at QuotaPath in a totally completely different product line. And we just literally right before this conversation, I was talking to him and aligning around that. Now he's looking at stability and bigger companies, or he's looking at QuotaPath. He's had a couple, to Craig's point, failed instances after I worked with him when we sold Trendkite together, and he did exceptionally well. And he's been my top lieutenant at multiple companies. I've de-risked it quite a bit, but he lives in California and the upside that he's looking for is going to be substantial. So the only way I can make that is say, look, this I'm not going to pay the base that would be at quote unquote a VP or CRO level because truthfully, this is an IC role to start. I don't know what I don't know, but I'm willing to pay on the commission base because I think our margins are still going to be strong, 2x what I typically would have paid for the first 6 months to a year. And that is where we're gonna head down this path and align to it. And that's kind of like you just have to
But that's a
evaluate
very
every
hard
single
message
part
to
of your
land to
business.
net new people. Like it lands because this person's made money with you. Every founder tries to
Right.
convince reps and leaders and everybody that, hey, bet on the upside. And it's like, yeah, but how often does that upside not happen? And so it only will work in this instance
It
because this
only works in
person
this
has
instance. So
history
that
with you.
going back to the point that Craig made is how do you do this at a $300 million business? You're PE owned, $300 million. The growth rates are 10% to 15%. How do you hire rock stars at that company?
Dude, all right. Let me know because I'm not in that game right now and I would love to know.
Like Austin, what is the story that you're talking with those CEOs about that are hiring talent there?
I think there's some private equity firms that are playing in markets where AI just hasn't become, the AI startups aren't necessarily that aggressively present. So I'll give you an example. TPG has made a really big bet in industrial software. And industrial software, the platforms sold today are sold primarily by hardware manufacturers who had also built the software to be used with that hardware. The customer base has been complaining through third party data. It's quite clear that the customers have been asking for a vendor agnostic independent software solution over here, but they need something that's a platform. They're not willing to like point solution 10 things in their facilities. That's a really interesting play for a private equity firm. So TPG went and bought a bunch of companies, combined them, and created an independent full stack software platform. A big part of their value creation thesis is scaling up go to market, investing in it aggressively. When they're going to market, they're not finding the same level of competition for that talent. Actually, what they're competing with are companies in structural decline. So they can go into that market and be like, we are building the best go to market team in this space ever. And that works. And so I think it comes down to like private equity, some firms are adjusting to the new reality. And some companies are buying assets or holding assets that are in extremely competitive spaces. And for them, the reality is very different. Like if you are outreach today, what does outreach do? Like you have to find a way to keep going with like a C team because who's going to want to work at outreach today? Like no one. Like who do you know that works at outreach today? Outreach is a few hundred million in revenue. No one wants to work at outreach. So it depends on where on tech, I think.
Yeah. I mean, is Nadia still the CRO there? That's a good example of you have to pick, like she always wanted to be a CRO. She had not sort of hit that moment. So you gotta that you have to make bets that other folks have and I think she's been there for a couple of years. I don't know how it's going there, but I didn't mean to, I did get nervous that they were going to say, who do you know at outreach? And I'm like, oh my God, my friend's there. But no, on the other hand, like that was for her, that was for them, maybe a reach, and for her, maybe a reach. And that's the bet that they have to make. They can't
It was actually a really good
necessarily.
hire because she, I think,
Yeah.
was SVP at Seismic before, right?
Yeah. That's
And
right.
so that was like a perfect like step up type of moment for them.
Totally, and very talented, and so you gotta be able to identify talent and bring in talented people that don't necessarily bring, the last 2 big hits, at software company X, at Mongo or whatever that might be. You're gonna have to make bets, and in that case, the bet worked out. But yeah, I think that's the case for I think what we're saying, though, isn't that the case for everyone on the market
I
besides
think like
the
unless you
kings?
are the ones that I think it's hardest for today is like if you're a Harvey or you're a Libor, like these like companies that are trying to maintain 500% growth at scale, life's
Yeah.
hard.
Where their
But I
where
think
their TAM is greater than all of legal tech market cap,
turning
right?
out that might be true though.
Oh, their
Yeah, but their
valuation was
revenue
higher.
just scale and soon it's going to be more than all of legal
Yeah.
tech's revenue, at which point you have to like kind of say, yeah, maybe the TAM is bigger than what everybody thought, right? But I
Just
think
with
for them, it's really difficult scaling up. Like for Cursor, it was really hard for Cursor to keep that sort of scale, hire the team, do all of that. But I think for the rest of the market, it is the right message where there's so many more opportunities than one thinks when you look at it like this. And as long as you're being creative, like you can build teams that can win. Even
Yeah.
in sports, like I don't get the sports analogies you guys are making, but
I could tell by your
look at
reaction. I was
Asad
like,
trying to
"Oh."
fit in.
it's not like Real Madrid wins every game that they play, right? And that's like the Galacticos type of team. It's not like they win everything. Um, the last question on this topic, Craig, for you is you've been studying go to market for a long, long time. And so you've got this like historical perspective on CAC, like what's been happening with CAC. To us, it just seems like it just keeps getting worse and worse and worse and worse. And if you kind of pull this forward, there's a lot of reason to believe it keeps getting worse and worse and worse and worse. And maybe the whole game has become that you use AI, you use outsourcing, you use all of these things to find efficiencies in other parts of your business because what you will not be able to control is CAC. How do you, that's how we're thinking, but like, how does that land with you? Do you agree with that? Do you have a different perspective on it?
We have these major runs that change everything. And we have, in this case, this is a combination of buyer behavior change and, costs by the runs that, we just had this conversation around, but that things tend to moderate, over time. Like one is, if you take a lot of the things that are driving, like the things that drove decent CAC, particularly on the marketing side, those things broke. And now you have to sort of rethink your approach there. If you look at the data on the marketing side, like the cost per opportunity, cost per lead, those things are high, right? It costs a lot. We need smart people to face this problem to sort of figure these things out. That's like hope as a strategy, though. And I feel bad making that my answer, but I do believe that. I do see things like, if you look at some of the ways that brand is fueling inbound for some of these folks and in the way that they're sort of prosecuting even the deal and the upside from an AI perspective or just like literally a product perspective, those things drive a lot of hope on the CAC side. I think us old
That is
enterprise
true.
soft,
That is true.
yeah, and our enterprise software veterans are like, it's hard for us to see that.
Well, Craig, I was actually just going to ask you, funny enough, on Topo because Topo had such a great brand. Like,
Uh-huh.
I think there's people that genuinely say I miss the Topo brand, and you all did a lot of various different marketing channel, different ways to market. And I was curious as to like thinking back to those years, it was what, 7, 8 years of work and all the different
Mhm.
marketing channels you had. Which of those channels do you think like would just absolutely not work in today's world? And which would you be like, oh, okay, I could actually probably like this could be our main way to market and the CAC payback would be pretty strong because it's a totally different era of building a company, right?
It is. But I think, and this not just because, it allows me to say really positive things about Topo. By the way, thank you. I do all the time. I get people still bringing it up all the time,
Yeah.
which makes you feel good, right? But all of it would work now. Look, we didn't do content syndication. We didn't do paid search. We did events, which a lot of people are doing, and we were very highly curated. So they were only folks that would, help us hit the sort of lifetime value that would make that work. We understood our data. So basically, even though we weren't like, there's no AI, we knew a couple things. One is if someone had a meaningful interaction with our content, so that's different than just reading one of our reports, that would be coming to one of our events. That soon became free advisory. We would do free advisory because we knew that the odds, once those folks touched and had that experience, was like a 45-50% conversion, that we pointed everything to that. We ramped up our live events. And then, by the way, we got, because of the nature of our business, AJ, like people paid me to go on the road with them. And that worked too. The data on that worked too. So like one of the keys to brand today is, can you use your data as a way to create it's one of the only,
Yeah.
besides like, your sort of human brand building, the only thing that you could do from a product perspective, in my opinion, because like feature types product stuff, I know we all talk about it ad nauseum, but the truth is if your product creates data that only you can create,
Yeah.
that is a unique piece of content or unique pieces of content that nobody else can emulate. We had that. And so, that's something you can take
Your
from
hit rate
today.
on outbound is just so high because it's
In some cases, you don't even have to do that
well,
outbound. But yeah,
you
you are
don't, but I
right.
think if you're creating very specific, I would call it outbound where it's almost a network effect because your customers are going to know a lot about your customers and whether it's competitors or partners or peers of your customers, you're going to have a lot of data on them. And you're specifically marketing to them. I mean, that is outbound, but it's just very clear. I call it account-based marketing, whatever you want to call it, but that's clearly outbound. But that connection, that top of the funnel conversion with your own data is extremely high, way higher than anything else you could possibly do.
100%. And the other thing you can learn from is our outbound back then was only to our events. We didn't try to get a meeting. And like it worked amazing because they would
You were
get
trying to get people to
You get the
attend.
meetings at the events.
yes. So like AJ, say we would combine what you just said, but we knew it's too hard, even back then for us, because we weren't a toy. If we were going to reach out to someone, we'd say, hey, by the way, we found this, that, and the other. We are doing an exclusive event where we will go through this data and yours, come to this. And that was how we did outbound. I think for a lot of folks today, that's how they should do outbound. They often kill their outbound by doing all this stuff and then going, by the way, let's, why don't we spend 30 minutes? I'll show you what we can do and see what keeps you awake at night. It's like, no, right? Like and so that was a big thing there. What I would add that Topo would have benefited, is what we're doing today, podcasting, the rise of YouTube. I mean, YouTube is ridiculous right now. I mean, think about that, might be the greatest acquisition in the history of tech.
Yeah, the Acquired did a revisit on the YouTube, acquisition, and
And
it's crazy when they did their 6-hour Google
we're going to pull this,
conversation.
Craig. So this is the perfect place to stop this. We're going to pull this thread in topic number 2. But right now, it is time. It is time for Quiz Pro.
Pro. Oh, yeah,
Okay.
we nailed it. Well, by the way,
This
that
is
was our best
time.
one. Without Sam, we nailed the cadence of that. So
Yeah,
thank
that was
you,
I'm
Sam.
starting to sense something happening here. I'm in the front
This is a
seat.
quiz, Craig. You and AJ have no idea what the questions are. You
Okay.
two get to conspire against me. I pick the questions. I know the answers. If you get 2 of them right, you guys win. If I get 2 of them right, I win. And that is the game. So far, I think I'm in the lead, but
No, I don't. We're not keeping the points. Don't matter. This is whose line is it anyway? Rules.
I see I'm
I
winning. Don't
will
matter.
say, last week we had a tough week. We had a tough week last week. 2
That
weeks
happened.
ago, we crushed you. It wasn't even close. The challenge is this all relies on the guest, Craig. So just so you know,
No
this is
pressure.
in your
No pressure. No
wheelhouse.
pressure. Yeah.
No
Well, then
pressure.
we're dead. Okay.
This
Go.
one, this is a fun one. So we're gonna talk about HubSpot. Uh, Salesforce, and ZoomInfo, the three public go-to-market tech players that are out there. And we talked about TAM a lot, right? In this model, how big is the TAM? It's this many companies, it's this much this. We're going to talk about how many customers each of them have today. Three of our biggest go-to-market tech players.
I think I know the
Let's
answer to
start with
HubSpot.
Salesforce. Salesforce has AJ close to more than $40 billion in revenue. Been at this for a long time. They're the legends that created SaaS. How big do both of you think Salesforce's customer base is today? Option number one, 150,000 customers. Option number two, 50,000 customers. Option number three, 500,000 customers.
Oh, geez. He didn't go from small. He really threw us off 150, 50, and then 500. Come on. Well, I do know when we get to HubSpot, just so you know, Craig, I think it's around 200,000, 183,000, I think when I last checked. So we'll see if I'm close there. But the ACV on Salesforce deals is way higher than HubSpot. So
For sure.
do you have a shot in the dark? The 150 to 500 is sticking out to me. One of those two. It's got to be one of those two.
So you said HubSpot. Well, they got all their. It's smaller, but that also works to their advantage because they could have someone
HubSpot's
that's
actually the
paid-
next option. So you guys will come to that.
Yeah, we'll get there. But if
I'm going to
so
say
if they were at 100,
150.
well, if they were 150 at 100,000 contract value, that would be 15 billion in revenue, and I think they're at like 60 billion, right, in revenue.
40.
40.
All
Oh,
right.
that makes me think 500
Yeah.
thousand is going to be the answer, and then Asad's going to tell me their average contract size is like $1 million or something
This is
ridiculous.
why
So
Craig was the data guy, because his option was right, but you guys are now wrong since you guys landed on the 500. It is
no,
100.
we didn't. We didn't say lock it in. We didn't finally answer.
You
Oh.
passed the clock. You locked it in.
He's also it's his game. He's allowed to call the rules, I
All right,
guess.
so we're 0 for 1.
Oh
It's
man.
150,000 customers, which is quite remarkable to be doing 40 billion in revenue across 150 customers. I think we underappreciate how big some of their relationships are. Like if you look at Salesforce as a spend across the Fortune 50, these are like 8-figure deals. These aren't even 7-figure deals.
Yeah.
Okay.
All right. Well, he wins some, you lose some.
Question number two. You might know this one actually, AJ. HubSpot's total customer base. What do you think this is? HubSpot is, I think, almost at 3 billion in revenue.
Yeah, they're going to do 4 billion this year.
4 billion. AJ is very hopeful that their valuation
Stock
also
price
comes
goes
up.
the other
You're a
way.
big stockholder. He's holding that till.
Asad told me to sell, and I am not selling my HubSpot
This is
stock.
ridiculous. This is just losing money. 150,000 customers, 300,000 customers, or 600,000 customers. Just to remind everyone, HubSpot is famous for showing the market, especially showing venture capitalists, that you can build a successful tech company selling into SMB.
I do think it's and Craig, I'll let you chime in here, but I did say 183. I don't know if they passed 200. 300 sounds a little too high. I feel like I would have heard that milestone, and I think Asad is working with old data at 150. But if we think if you have a strong opinion, it's 300, then we can go that route too.
Give me the options again. So we got 150, 300, and what's the other one?
600.
Okay. Well, 600, I think we're both throwing that one out, right?
Yeah, 600 is way too many.
Now, here's the thing with HubSpot is depending on how they do the customer counts, I mean, you have many ways that you could be a customer of HubSpot. I mean,
Multiple
and
hubs.
I don't think 300K is out of the question.
I think you're probably right. I think the way you're thinking about this, and I remember when they crossed 100,000 just a few years ago, but I think you're right. It's probably closer to 300 than it is 150, and I think that's where we should lock in.
That in. And you are right, Fred. That's actually very impressive how you got to that. It is 300,000 customers, which
Amazing.
is crazy. Like that's almost twice as many customers as Salesforce has. Obviously different size and different sorts of customers, but that's a lot of customers.
That is a lot of customers.
I beat up on HubSpot, and then I look into their history and I look at the business, and it becomes more and more impressive the deeper you go because of how hard of a business it is to get right.
Well, the challenge with it is is today's world conducive to upselling SMB and mid-market customers versus all of those customers saying, no, we're just going to build our analytics package on our own with Claude. So the market is saying probably the latter right now. We shall see.
Yeah, but also their products haven't been that impressive. Like I think if they had impressive shit, that it would work.
Yeah, Breeze isn't
ZoomInfo
running
is
along fire.
the third question, my friends. The last company in the public markets that is go-to-market pure play, about $1 billion in revenue, a little bit more, trading at a pretty tough multiple these days. Their customer base, 5,000, 15,000, or 35,000.
Ooh,
ZoomInfo providing data.
it's a tough number. What's their you said what are they trading at right now for market cap?
I think it's like just 2x of revenue.
Okay.
I'll give you
Yikes.
the specific one right now.
And what were the choices again? While he's looking that up, AJ, do you remember?
Your choices are 5,000, 15,000, and 35,000. They're trading at 3.2 billion today.
Okay.
Stock is down flat in the last year. Yeah, pretty flat.
Yeah. I would go somewhere between 15 and did you say 35K? One of those two.
35K, 5K, 35K, 15K.
There's no way it's 5K. Is that
I
were we
feel
saying that?
small. Yeah.
Oh, no way it's 5K. I don't think that's 5K. Yeah, no
How
way
many
it's 5K.
customers do you have, AJ?
1,500.
Okay. So ZoomInfo at like 3 billion is obviously not like
I don't have three. Yeah, I'm not a 3 billion market cap company yet. So it's not
You're working on it,
5,000.
working it.
15K. What do you think, Craig? This is for everything. This is whether we win or lose.
This is a big one.
You have is there, I don't even know anymore. Is there a minimum buy-in these days on ZoomInfo?
We were customers 3 years ago, and then they had the whole challenge with their call recording. What was that tool called? Chorus, yeah, where they didn't integrate really well, but their data was very, very expensive. We were spending 100K at that time as a small company. So they probably have larger they have as large ACVs, maybe as large as Salesforce's ACVs. So if you do the math on like a $200,000 ACV, because they work with enterprise customers, what does that get net out if you do the 2 billion, 1 billion, 1 billion or 2 billion in revenue? 1 billion divided by 200,000.
You know what's hilarious about ZoomInfo's website is that they have a section up top that says pricing. And so you click it. You're like, this is great. I'm going to see some pricing options, right?
There you go,
And then
pricing.
basically on that entire page that is called pricing, there's a bunch of buttons you can press to go and connect with somebody for a call one day down the line. But there's not $1 figure on that entire page. Like if you did Control F $sign, there's nothing. It's zero. It's like you have a pricing page with $0 signs on it. That's fucking crazy.
I think it's 30. Wait, no, I think it's 15,000 is what
You guys have 5 seconds.
If we gotta go, gotta go.
We have 35,000. 35,000. Change it to
It is
35,000.
35,000.
Oh,
You
thank
guys
God.
win.
Good job. Jeez.
Well done,
I
guys.
was
Well
not
done.
sure. I was not sure there. Okay. So did we get the second one?
You guys,
Yes. Yeah, we crushed him. We got
Yeah,
Asad.
you guys did a good job today.
After
I
starting
knew
0-1
you'd
with
win.
Salesforce.
So now, anyone listening, our audience, you know the size of the customer base of all three companies. Salesforce 150,000, HubSpot 300,000, ZoomInfo 35,000. And you kind of know how much revenue they do as well, and gives you a much better idea of what the TAM and go-to-market actually is all about.
Does it? I don't think the market knows. Sure.
I don't know what
2
you're gonna
thumbs
do.
up for that one. Sure.
I don't know what you're going to do with that. Okay, moving on to topic number 2. Craig, we're talking about CAC. CAC keeps increasing. We need to be creative on how to drive demand in a super efficient manner. And one of the things we've been noticing is just generally these AI companies are investing more in brand, but there seems to be this big pickup in founders going direct. There's a rise in job postings for going direct, storytelling, things like that. There's venture firms like yourselves and Andreessen that have workshops and programs to equip founders to go and be direct as well and learn how to do that. And those who figure it out, it does work quite miraculously for them, especially in the early days. Like it's really powerful in the early days. Talk to us a bit about this. You've invested a bunch of time and energy into this. What's your point of view here? Why do you think this is important? How valuable can it be?
Well, I guess it is measurable because the numbers do work, but the reality is unless you have, like a lovable, well, I mean, he had a good founder brand too. Let's do Cursor. Like you take a community-based takeoff, right? In a PLG type of operation, you can grow the thing without founder brand. But for the rest of us, like it is one of the only things you can do. So it's funny you sort of landed on the CAC direction, which obviously I care about. If I make recommendations, people's CACs I'm in trouble. But I'm actually my impetus for quadrupling down on it was because everything else is so hard. We've just seen it work time and time again. And so that's really where I'm coming from is I'm working with late seed, Series A, Series B. And by the way, there's still folks later on that still you just that takeoff point. If you're just in a feature war with people these days, their feature warring doesn't work because it's too easy to make software. The brand becomes this hypercritical thing, and people are gravitating to people. The value of building a founder brand, when you look at the data, it's amazing. And that's for pipeline. That's also for, across the life cycle, closing deals. We see certainly there's data that will tell you, I don't have it in front of me, that deal sizes will be increased when they're engaging with the founder's content. And so, but if you just took pipeline in and of itself, pipeline is so hard right now. And we let's just say the tech market, we have to start like looking at how everyone else is consuming their information. And there's a number of things that are clearly happening today. If you look at just politics, you look at everything else. I had told my kids, oh, the Final Fours used to be on CBS. They're like, what's that? They have no idea. And then I said, oh, well, now it's on TNT and TBS. What's that?
Now, what are you talking about?
They have no idea.
You remember the year, by the way, Craig, when you could watch all four at the same time? What a glorious,
that was the
the
breakthrough of the
best. And you
century.
could watch it online and like
Oh,
you would
man.
stream it.
man.
And my
Oh,
goodness.
man. Our IT guys would have to be so prepared for the first round of the
Well, it was in
NCAAs, man.
360p. Like you could the ball was like just this orange blob that would like dribble down the court.
Yeah.
But you got all four games at the same time. It was glorious.
Is this something that when Scale or Andreessen, who's the other firm that's invested in this, like how much is this affecting how you guys think about investing in an early stage company? If let's say seed bets are about founder, market, idea, before it used to be, at least from the conversations I had, was is this founder technically astute? Can they build a team that is world class? Can they do these certain things? Now, is there another element of can this person be market facing? Can this person have a point of view that the market enjoys interacting with? Like, is this now a thing that your investment team thinks about at all?
First of all, disclaimer, please make sure you put it on. I am not an investor. I know you know that, but like it does get murky, right?
Which,
And
by the way, also Craig, Pablo Dominguez from Insight, he's on my board, but he says this every single time. He's like, please tell Asad I'm not a fucking investor. And and Asad doesn't care. It never
yeah,
cares.
at least in the early stages, I think the technical and the founder, and there's a lot, they're looking at how well they understand the market and they can build software. I'd say what they do notice social and how these guys are being picked up on social. Now, like we talked about before, they're like a a DevOps product can fly on social once they pick it up, right? That is like a crowd-based type of product. But for the rest of them, like I think that sort of social pickup comes from founder brand. And so I don't know that they would say, let's look at founder brand, but they would see the results of it very early.
The lovable guy, like he does all his own Twitter stuff right now,
I
and
know.
he's pretty big on Twitter. And you've got all these founders who are like founder brand, they are in market. How much time is it? Like, what are you telling them in terms of carve out 15 minutes a day, 1 hour a day? You know, 2 hours a week? Like, what's the operational burden of growing direct? Like, what is too much? What's too little?
Like that is a generation of founder who grew up, on their thumbs, like, and so this is natural to them. They're naturally scattered and all over the place, looking at like I don't know the guy, but you could probably see him just going down the hall going, we're about to buy Figma. I don't know if you guys saw that, but that's like one of the most viral things this guy did, make up this funny tweet that just took off or whatever they call it now. The and so it's natural to them. And they, by the way, don't necessarily, a lot of them just engage on there. They don't necessarily create deep, meaningful content.
It's like a combination of shit posting and like once in a while saying something interesting, but like a lot of just like being a human being to some extent. I think people like him come across more human than, let's say, the cursor CEO comes across. Even though they're both fairly technical people, but one comes across as far more approachable and human. The other one comes across as like, maybe this is the sort of genius that we don't interact.
Yeah, that's right. I mean, look, that works too. I mean, like, people tell me all the time, well, not every founder is going to be that charismatic or at least, express charisma on, in their interactions on the internet, but like market genius. So whether it's developer ops or, what cybersecurity or whatever that might be, the crowd will gravitate to that as well. But here's what I would say for the folks where you're not naturally on, like, if you and by the way, Lovable is a full operation. Like if something goes up, the entire company is mobilized to go share it, comment on it. They have a plan. If you're working with a founder where this is a struggle, you tell them you will have to take time because this has to be you. Like Claude can't write it. I have a funny story on that has to do with top line in a minute. I attempted to do my first draft in Claude. It took me longer, but that's a different story. So but it has to be you. But what we do is there are many ways to create this content. And you always want to have a junior woodchuck that's there to help support you. So like if you take Gal Aga, right? He does a good job. He writes on Sundays, 3 posts, the team sort of goes through. I work with founders who leave a sales call and they record it into their phone that gets transcribed and gets, they go into. So there are many ways to do it. You have to find what's the most natural way for you to express like what's going on in your business. So you start with one, what's your narrative? What is your narrative? Not just your company's narrative, but what is yours? Like, what do you want the market to know? And once you start that, then you say, okay, great. Like, how are we going to get that, out into market? Like clearly, Aaron at Box's narrative is agents. My God, I want to write Trisha and be like, hey, bro, we got the agent thing. You gotta move. You gotta give us some more stuff. But like, no matter what, they need to spend some time.
Yeah.
The amount of time depends. The issue is when someone is so meticulous because social is impromptu. Now, look, there's a lot of really great written stuff like, Top Line Newsletter isn't, it is founder branding in its own way. And it's deep, well written, etc.
Now with like AI, when you're on social, you can like tell almost instinctively when it's AI and when it's not. And if it's overly polished, I think it's one of the tells of AI. And when you see something that's a little bit more raw, it feels like this is the person.
I've used Grammarly for the last like 5 years and it's been
You should
like,
churn.
I know. Now I have to churn off of it. But
Churn. Like, don't use it for email. Don't use these things for anything
Grammarly is just, I don't know.
just
Grammarly is great.
trust your own English, man. Like, you grew up in America, but like you got this. So I'm sure it'll be
in
fine.
America.
Yeah, to your point though, I just think so the biggest issue is the guy who wants to spend a month writing and rewriting his post or her post, and they can't because you do have to be. It won't work if you come in once in a while. It will only work if
you're
you're
very
there. If you take LinkedIn, it's 3 times a week. If you take X, you have to go. Right. And X, that feed is fast, right? And so you gotta be on that. So that you can't spend all your time trying to nail it. You have to get pretty close and then look at the numbers. If it didn't work, like don't worry about it. It's gone. It's vaporized in a week. and you just keep going. And so that's often the hardest thing, is the folks that take too much time.
This is the perfect place to end this and get to our last segment.
Bulls versus Bears.
And bulls versus bears, Craig, is very simple. I'm going to ask you a question. Are you bullish or bearish about that statement? I'm going to start with Asia so you get a bit of a feel for this. Asia, I have been known to call Gong commodity product with luxury pricing and not being the kindest about them, but they have shown that you can't think that somebody's story is over. Sometimes it's not. They just hit 500 million in revenue. That's very, very impressive. That's very impressive. And from what I hear, growth has accelerated at Gong, and it is going well for them. And so now at 500 million in revenue, so much changes in such a little bit of time. The question that becomes, I think, worth asking is, can Gong go public? So are you bullish or bearish that Gong goes public in the next 36 months?
36 months?
36 months.
Bearish.
Bearish?
Yeah, very bearish.
What are they waiting for? Like, if you get to 500-600 million, have a decent growth rate, boom, let's go out. Let's make some money, give some money back to these investors.
Well, we talked about 3 go-to-market tech companies that have their combined enterprise value of those 3 in the last 3 years has decreased immensely.
Substantially.
Yeah, right. So you have a go-to-market company, 1 there. 2, I look at companies, I'll just take Stripe because Stripe never went public, and I doubt it will go public, but I don't know. I have no idea. I'm not an investor as well, by the way,
But
Craig.
Stripe has the sort of access to capital privately that Gong obviously no longer has, right? Like, no one's investing in Gong again. Like, I think it's done, no?
So at 500 million at growth rate, at probably strong margins and cash flow positive, does it really need to go public? What is it investing in that it's going to do? I don't know. I don't have the
cap
product
table
roadmap.
that would be like, let's go public.
I don't think they'll keep their growth rates up to that level, and nor do I think it makes sense for them to go public.
I
But
think
I
this
am
is a
not.
bubbly moment in time.
Yeah, I don't know. Craig, what do you think?
Well, I would answer it based on the I mean, you got to get to 800 to go. I mean, 500 is good.
But they were at 300 just less than 24 months ago. I mean, their growth
That's the
rate's
thing.
strong.
Yeah. If you ask me though about Gong, Gong is an example of a remarkable brand, right? Because I always hear from insiders that know sales tech, my God, how they're gonna lose this, that, or the other, and they had that in an insane growth rate over the last 18 months, 2 years, and part of it is the brand, the data flywheel, people just sort of being used to. I've had, like I just talked to a consultant the other day, he recommended a new choice, and the executives there are like, well, no, I don't know any of these brands. We're going with Gong. So you do have there are things that I think they've in many ways.
Anthropic, the Anthropic's head of sales at SaaStr was showing her tech stack, and really, like, that's the best advertising you can have. And she was like, we're big Clay users for enrichment, we're big Gong users for pull record in the site. That's pretty good marketing. Like, that is wild.
She only mentioned 6 apps.
50% of their enterprise business was self-serve. Enterprise business. That's crazy.
So why would they pay commissions off of that? Asad?
They don't. They just give you lots of equity for the stuff that doesn't.
They won't ever
It is
pay
pretty
commissions
wild.
off of that.
Okay, last question. Craig, this is your question. This is your question. You've been talking about going direct, founder brand, and so obviously channels matter. Are you bullish or bearish that LinkedIn remains a primary channel for going direct? Or, the second part of that would be that if you're choosing a platform to go direct on and build your brand on, there's very little to justify going anywhere other than X.
I'm bullish on LinkedIn. So I remain bullish there.
Yeah.
And I know everyone always comes to me and says, well, people are writing about their kittens or whatever on there. And it's like, bro, I remember when people did this with Facebook and they're like, Facebook is dead. Look at the feed. And I mean, the Facebook freaking affected elections globally. Like
That's fair.
it,
Yeah.
it is like this is part of the game. As more people come, more slop comes, and it just means you got to do better. And the algorithm will continue to get better there as well. So I'm bullish there. X though, if your market is on X and there are a lot of the sort of developer cool kids are there, you got to play there too. I don't think it's an or, by the way. I think it's an and. And I think but there's no point if your market's not on there. Like VC Twitter and DevOps Twitter is a real thing.
Yeah.
They're
AI
they're
Twitter
there.
is a real thing.
AI Twitter. I mean, by the way, on the founder brand, sorry, I know you guys, we have a plan. There's a guy who I know, I'm not going to mention his name because it's one of his secrets. X is 2 days ahead of LinkedIn and he's figured it out. That is he goes to X, finds AI
Yeah, you could play the
info,
game.
and then he goes and he brings it to LinkedIn and he looks like a genius.
What a bunch of
That
arbitrage.
arbitrage is definitely there because LinkedIn is so behind. Like there's some news that you would think is like purpose built for LinkedIn, and you'll sign into LinkedIn 3 days later and there's no one talking about it. And it's like on Twitter, it's like the minute it happened. It's before it happened. It's a prediction. AJ, did you have a point?
No, I was going to close us out. What a great
Read us out, my
episode.
brother. This has been
No,
great.
I
really
have
enjoyed
I spent all my points on this episode. I used them all. Craig, it was awesome having you. Thanks for all your investment. I'm just kidding. You gave no investment advice on this episode.
I'm gonna get screwed, man. Yeah. Okay, good.
Thanks for all your GTM advice on this. It was great, great chatting with you. Asad, always a pleasure. So with that, this has been another great episode of Top Line. Thank you all and have a great night, evening, morning. Bye.